Imagine you wake up in 2027. You need to send money to a friend, pay your rent, invest in stocks, and get a loan. But here's the twist: you don't need a bank for any of it. In fact, most banks as we know them today no longer exist. This isn't science fiction. It's already happening. And the scariest part? Traditional banks are watching their empire crumble in real time, unable to stop it. Right now, in 2025, banks are facing an existential crisis. According to recent reports, over 60% of Gen Z consumers rarely visit physical bank branches. But it's worse than that. They're abandoning banks entirely. Digital wallets like Apple Pay, Google Wallet, Cash App, and Venmo have transformed from simple payment tools into full-fledged financial ecosystems. They offer everything banks do, but faster, cheaper, and without the bureaucracy. Here's what's really terrifying for traditional banks. In China, digital wallets already control over 80% of all transactions. Alipay and WeChat Pay have essentially replaced banks for a billion people. And this model is spreading globally at lightning speed. The question isn't if banks will be replaced. It's how fast. So what makes digital wallets so powerful? 3 things: speed, accessibility, and innovation. Let's talk speed. With traditional banks, transferring money internationally takes 3 to 5 business days and costs ridiculous fees. With digital wallets? Instant. Anywhere in the world. For pennies. Accessibility? Banks require minimum balances, credit checks, and mountains of paperwork. Digital wallets? Download an app, verify your identity in minutes, and you're done. No judgment, no gatekeepers. But here's where it gets really interesting: innovation. While banks spent the last decade fighting regulation and protecting outdated systems, digital wallets built the future. Apple's new savings account launched in 2023 attracted nearly $10 billion in deposits in just 4 days. PayPal offers buy now pay later services. Cash App lets you invest in stocks and Bitcoin. Revolut provides instant loans and cryptocurrency trading. They're not just replacing banks, they're reimagining what financial services should be. You might be thinking, why don't banks just build better apps? They're trying. But they're fighting with one hand tied behind their back. Banks are drowning in legacy systems, technology built in the 1970s and 80s that costs billions to maintain. They're regulated heavily, which is good for stability but terrible for innovation. And they're burdened by thousands of physical branches that bleed money every single day. Digital wallet companies? They started from scratch with modern technology. No branches to maintain. No legacy systems to update. They're pure software companies that happen to handle money. And here's the brutal reality: the average bank spends 70% of its IT budget just keeping old systems running. Digital wallet companies spend 70% on building new features customers actually want. It's not a fair fight. And banks are losing badly. The numbers tell the story. In 2020, digital wallet transactions totaled $6 trillion globally. By 2024, that number exploded to over $12 trillion. Analysts predict $20 trillion by 2027, more than half of all global transactions. So what does 2027 actually look like? Based on current trends, here's the reality. Physical bank branches will have declined by 50% or more. The ones that remain will be luxury services for the wealthy, like private banking lounges. For everyone else? Completely digital. Your digital wallet will be your complete financial hub. Payments, savings, investments, loans, insurance, all in one app. You'll switch between services as easily as changing a Netflix subscription. Traditional banks that survive will become invisible infrastructure. Pipes that move money while digital wallets own the customer relationship. They'll be like power plants, essential, but consumers never think about them. Some banks will partner with tech companies to stay relevant. Others will be acquired. Many will simply shut down. And here's the controversial part: we might not need traditional banks at all. Decentralized finance and blockchain technology could eliminate even the infrastructure layer, making finance completely peer-to-peer. But this isn't just about technology replacing old businesses. This is about access and equality. 2 billion people globally are unbanked. They have no access to traditional banking. But they have smartphones. Digital wallets are bringing financial services to people who were excluded for generations. In Kenya, M-Pesa transformed the economy by letting people without bank accounts send money via text message. In India, digital wallets help millions of people enter the formal economy for the first time. This revolution is making finance more democratic. And traditional banks? They were never built for that mission. The death of traditional banking isn't a tragedy, it's an evolution. And it's happening faster than anyone predicted. By 2027, the way we think about money, payments, and financial services will be completely transformed. The banks that dominated for centuries will be footnotes in history. The digital wallet revolution isn't coming. It's already here. The only question is, are you ready for a world where banks are optional?